also look after and coordinate the work of the IDFC Foundation, which is the development side of IDFC. I think Sudhindra has already very clearly driven home one fact, and that is it's very clear that there is so much that really needs to be done when it comes to Indian infrastructure, and that there really is no room for complacency. Sometimes a few years of high growth have made us overconfident and perhaps very complacent. But there are several areas of the Indian economy which need such huge attention. The issue is not so much the numbers. The issue is that, even if we were to do a fraction of what China does in 3 years, I think we would really have taken large steps forward. What I really do is not take too much time, because the idea is to hear from you. But I've had some experience with the railway sector. And I know that there are at least 2 other people in this room who have intensively been involved in some of the initial projects which have to do with port connectivity. Yogendra Sharma has implemented one project which is the connectivity to the Adani port. That was, I think, a very difficult project, and yet he achieved it within a very short time. Tapsij, another colleague of mine from IDFC, has been involved in advising the promoters on the Pipavav Rail Company. I've been involved with the Hassan-Mangalore Rail Development Project. In fact, for a couple of years, we literally ran that on behalf of the government of Karnataka. So it's very clear, as one looks at these sectors, there have been clearly declining outlays on railways in the transport sector. Very clearly, the the investment in the railway sector has been declining in terms of share of the transport sector. High operating ratios, it has changed, it has reversed in recent years, but again we are seeing a problem in the operating ratio of the railways, which will again very clearly impact cash surpluses and the ability to invest in projects. The issue here is that the implementation of the 6th Pay Commission recommendations will really have serious repercussions for the railways. So railways require massive funding, apart from Vision 2020. Even in the 11th 5-year plan, what we are looking at is 230 crores, and that itself is a hugely ambitious target. So if we are looking at total levels in the next 10 years in excess of 10,000 crores, we need to remember that the plan itself in the first 5 years is just for 230,000 crores, which means the last 5 years of Vision 2020 are where the bulk of the investment really has to happen. And for that, a lot of preparation has to be done today. So private sector participation very clearly is seen as one of the key strategies for complementary infrastructure and clearly for improving operating efficiencies, which will allow the railways to release funds and surpluses for priority activities. This is the numbers in US dollar terms, in terms of the investment that is envisaged, and it cuts across different kinds of railway infrastructure. But if one were to look at the experience of the railways of public-private partnerships in the railways and where private investment in the railways so far has happened, we would find that there are very few areas which have really seen a very high degree of private-public partnerships or private investment flowing into the railways. It has been there on the surface in several of them. In the dedicated freight corridors, not really much in the initial years. The question is open for debate as to whether some more can actually happen right in the initial phases itself. High-speed passenger trains currently under planning stage, feasibility studies under preparation. Railway lines, particularly port connectivity projects, whether it's Kutch Railway Corporate Company or the Virangam-Mehsana line or the 3 other port connectivity projects have been implemented. But these are really such small sections of lines, 100 kilometers, 180 kilometers, 300 kilometers, not really very long sections of lines. One area which in the recent past has seen private investment coming in is in the container services, where 15 licenses have been awarded on the basis of fixed license fee. Experiences vary from very happy to not so happy. And again, this will be useful to get a feedback for those of you who are involved in the container services as to how it has happened. There have been policies on wagon leasing, wagon investment scheme, but these are really not, they're all surrogates for financing rather than any high degree of private investment in the railways. An area which I think we really missed out was the telecom infrastructure. RailTel, very clearly, you're not seeing much of private investment. Catering services, some tourism-related services like Palace on Wheels, parcel services, a few of them. Some of them are in the nature more of outsourcing than really PPPs. Real estate development, a lot of expectations were there on development of rail terminals on commercial basis, but I don't think the initial experiences have been positive. It was also not helped by the very severe downturn in the freight markets. non-railway specific activities, there are arguments on, for example, issues like medical services, management of housing, management of schools. There are about 3,000 schools that the railways manage, and several non-core activities where railways are engaged in. So these are where we are today. And so there are key challenges, and from the railways perspective, there are key challenges in terms of safety. Safety is one issue which the railways normally look at very critically, and that's often a bogey for private investment coming in. What about contingent liabilities? Are we taking on a lot of contingent liability by signing concession agreements? Whether a program approach like an NHDP or an NMDP with some dedicated funding coming for the railways, would that allay some of those concerns? That's an issue which is very important. There is a sense that there is lack of private capacity. The railways' experience of seeing large-scale private contracts in the railways has not been very high. Till very recently, they were much smaller contracts. The larger contractors were not really involved in the railways. We had a similar situation in the road sector, and IDFC, we were involved very closely with the road sector. To even talk of people who had done 20 crores and 40 crores at that point in time, we could just count by hand. Things have changed. You have in the road sector, for example, at least 20 to 25 players who can be counted as being real investors in the sector. What about loss of revenue? And this again brings to mind when railways moves into a public-private partnership mode, there are clear policy issues. Railways in its regulatory function, railways in its commercial function. How does one manage the commercial versus regulatory function? The experiences of some of the initial operators for some of these initial projects has not been happy, particularly in the area of sharing revenue. So these are some of the key challenges, and this is what the private sector has been talking about. We've recently done a study on behalf of the World Bank for the railways, and some of these parts of the presentation are linked really to some of the feedback that we've received from a survey of various private investors. And clearly there are challenges in terms of what happens when operations and revenue are controlled by the railways, the monopolistic side of it, how does one manage day-to-day dispute resolution, approval processes are difficult, lack of a clear nodal agency. There is a PPP cell in the railways, but not a very big one, not necessarily very active, and not able to engage in a large-scale manner. But there is very clearly from the railways perspective, yes, there is opportunity for PPP. Closed circuits, not necessarily much larger scale. This will not lead to much larger scale opening up of the railways or major gains in operating efficiency. Standalone, port connectivity. Land and asset development, this is a key thrust area. There is a Railway Land Development Authority that has been created. So this entity is supposed to develop the whole large parcels of railway land. Railway is probably the largest or second largest landlord of assets in the country. Logistics related, sidings, parks, terminals. Container trains, of course, and rolling stock. But rolling stock, like I said in the past, has been largely more from the point of view of financing. It's a surrogate really for financing. So there are many of these activities, and if one were to look at potential areas, to my mind, there are different areas where the private sector can actually be involved, and it can help the government to achieve the very ambitious targets that it has. In the dedicated freight corridor itself, even if the private sector doesn't take the commercial risk, there are different approaches, which could mean a payment for services approach or akin to the annuity method. Could there be a role for that, linked to an access charge? High-speed passenger trains, clearly a role for private sector operations. Is it possible to split fixed operations and train operations and have the private sector participate in either of them, in both of them, depending on priorities, and figure out what is the best way of making sure that revenues are available to the private sector in such a manner that the projects are sustainable. Passenger stations, telecom services, TAC renewal, anything that has to do with increasing operating efficiency. So there are fairly large areas. The report itself has talked of certain areas, and to my mind, unless we see a large-scale private participation in the railways, we would not really see the kind of investment that is envisaged. 200,000 crores in 5 years is a large amount. Okay, it's very, very comparable to the National Highway Development Project, which looked at about 250,000 crores in 7 years. So it's a huge target that the railways has. And if one were to look the following 5 years, it's even larger. So while there might be many skeptics and many cynics among us, the whole issue is how does one actually reach there, and what does it take to reach there? Thank you.